And let's talk about the pharma space because we have Param Desai who tracks this space very closely. He's the analyst at Prabhudas Lilladher. He joins in now. Param, good morning and good to see you in. You are positive on the pharma sector. So I just want to talk a little bit about the results, right? One by one, Cipla is the first one that I want your view on because the margin guidance of around 24.5 to 25% was positive. But do you expect to see more upsides on the stock courtesy these numbers? And if yes, what is your target price?
Good morning. So obviously Cipla numbers were in line with our estimates despite Q4 seasonally being weak quarter for them from an India perspective. Their margins were pretty healthy. And as you rightly said, their margin guidance of 24.5 to 25 was a positive surprise. Before Q4 numbers, I was not baking in my estimates were slightly below 24.5. So to that extent, it was positive. They have some reasonably good US pipeline in FY25, 3-4 peptide launches. So timing of that will be critical for this margin uptick. Along with that, the scale up in couple of the key products like albuterol and Rentrolide, this will be the key thing to watch out for, which can scale up their margins beyond 24.5 also. And along with that, I think that a couple of facilities like Goa and Indore stuck up with FDA. So Goa is likely to come up with a re-inspection in H1 FY25. So clearance of that also could pave way for some of the niche approvals like Abraxane. So some of the things will be closely monitoring, and if all comes into the picture, then there could be further uptick from their margin guidance.
Param, hi, morning. Actually, the Cipla, Lupin, Piramal Pharma, Aurobindo, I mean, the entire space actually was buzzing yesterday. The big story in the US, of course, has been the price decline becoming smaller and smaller. And at some point that will stop. Are stocks exposed to that market, the US generics market, adequately factoring such a scenario, or I mean, there is more to go? What's your sense?
So last say 12 months or so, it's been pretty favorable situation from a US perspective. As you rightly said, the price decline is on a lower side versus what it was say 2-3 years back. Currently, the scenario, also the commentary of most of the companies post Q4 numbers do indicate that pricing is likely to remain pretty kind in the near to medium term, given the drug shortages, given some of the facilities outside India are under stuck up with FDA compliance. So in my sense, from a near to medium term, yes, the pricing scenario is likely to remain favorable for some of the large US-centric companies. But having said that, this is a competitive market. So beyond say near to medium term, if any price erosion beyond 5% is not baked in the current as well as the street estimates. So any sharper price erosion, I think, will be negative from sector perspective.
Okay. Hi, Param. Good morning and good to see you. What about Dr. Reddy's? That's a stock you're not too positive on. Tell us the rationale for that.
So Dr. Reddy, obviously the Revlimid is one of the major driver of the earnings in the last year or so, and that will continue the case in 25. But if you see X of Revlimid, their base business margins were slightly disappointing. It's not about the Q4, but last 2-3 quarters has been disappointing. X of Revlimid. So Revlimid beyond FY26 won't be there, and that contributes around 25 to 30% of their overall profitability. So beyond Revlimid, there is limited visibility in the US in Dr. Reddy. That makes us negative on the stock.
Okay. What about Lupin? Lupin has a good pipeline in the US. They have some recent launches which were positive as well. Do you have a hold on Lupin? But do you think that there is more upsides in store for that stock this year?
So Lupin had the results were in line, and even the guidance of 10% revenue growth and plus 20% margins were pretty positive. And if you see a couple of days back, they had relaunched the Mirabegan. That's a positive development that was not baked in their guidance as well as our estimate. So that basically it's around $30-35 million annualized run rate until further competition kicks in. Could possibly upside to 5 to 6% EPS upside to our estimate. So momentum will continue in Lupin. They have a good pipeline. Most of the facilities are clear. And in the next 3 to 4 quarters, I think their US looks pretty interesting. They are also guided scale up in the Spiriva, which is one of their key products. Along with that, there are some 2-3 niche launches lined up in the coming quarter. So we continue to remain positive on the name, and we see that US as well as margins, both the things will continue to remain pretty strong in the near to medium term for Lupin.
Param, one of your, by the way, yesterday's listing, do you have coverage? Indigene?
No,
Did you?
we do not cover.
Okay. In the mid-cap space, I was reading you like JB Chemicals, Torrent Pharma. I mean, are those your top ideas?
Yes, in the mid-cap space, these are the Torrent Pharma and JB Chemical are my preferred picks. Both.
And that JB sort of transaction is pending. Anything? Will you? I mean, you think that has any implication till the time it gets done?
Yeah, there could be some technical implication, near-term implication till that transaction was done. We don't know when the timing will be there. But having said, fundamentally, I think their earnings trajectory looks very positive. Around 80-85% of their profitability comes from domestic pharma plus contract manufacturing, where the visibility is very strong. They have been growing, outperforming both on the domestic pharma market, plus they have enough capacity on the contract manufacturing. They can easily double their revenue in the next 3 to 4 years on the contract manufacturing side, which is a very high margin in nature. So earnings growth visibility is extremely strong from a JB Chemical for the next, say, 2 to 3 year perspective. We remain positive. Any correction because of change in hands, I think should be used as a buying opportunity.
Do you have coverage in hospitals, Param? Do you track it?
Yes, we do cover hospitals.
Okay. And there, I mean, what's anything emerging, anything new? Anything you're pushing to investors?
So hospital had a very strong dream run in the last 12 to 18 months. Having said that, as I said, the capex intensity cycle will again go up for the space. But the good part is that this time the capex cycle is not entirely greenfield. It's a combination of brownfield plus greenfield plus inorganic initiatives what most of the companies are taking. So that won't drag too much on the margin profile. Despite my capex intensity going up, I see the overall margin level for the next 18 to 24 is largely to remain sustained at the current levels. And also the return ratios are likely to remain healthy, 18 to 20% plus. So we remain positive on the space. I think EBITDA compounding story of 15% plus will continue, largely aided by the capacity addition what most of the companies have been doing.
Okay, all right. We'll let you go on that note. Thanks a lot for joining in. That's the word on the pharmaceutical space. But the